I want to share with you the law of success for S corporations. And if you have an S corporation this year, or you're trying to really open one, I want you to really pay attention to this laws of success. The first thing you want to do here is that you want to understand S Corp structure and requirements. Because the thing is that the IRS has some specifics when it comes to a S corporation. And if you want to be a successful S corporation shareholder or owner, you got to really understand what the requirements really are, okay? The government is really strict when it comes to those requirements. First of all, you have pass through taxation. So, as corporations are taxed like partnerships, with income and losses passing through to shareholders' personal returns this year. You got to have the reasonable salary rule. So, as an S corporation owner, if you are working for the company, you must pay yourself a fair market wage and withhold payroll taxes as well. You have also the 100 shareholder limits. So S corporation can have no more than 100 shareholders, and all those shareholders must be U.S. citizens and/or residents. Okay, and you also have one class of stock. So your S corporation can only issue a one class of stock with equal rights to distributions and liquidation proceeds. Finally, you have strict ownership rules. So if you are a shareholder of an S corporation, you got to be an individual, or you have to be affiliated with a certain trust or estates. So no partnerships, corporations, or non-resident aliens are actually allowed to be as corporation shareholders. So if you want to be successful as an S corporation shareholder, or even let's say owner, make sure you pay attention to those eligibility requirements big time. Okay, very important. The government actually is known for cracking down on those who do not pay attention. The second law of success for S corporation is to actually have a buy-sell agreement, because a buy-sell agreement establishes exit plan, helps you avoid ownership disputes, maintains the S corporation status, right? Because you are complying with the federal regulations. You are also able to protect company finances, and also basically a buy-sell agreement forces difficult discussions, especially if there are some disagreements among shareholders. Another law of success when it comes to S corporation is to actually it has to do with the issuance of share certificates. Let me explain. If you have an S corporation, you want to issue share certificates because this is a legal requirement. You are able to avoid ownership disputes. That's really good. You can facilitate various processes such as transfers. You can maintain S election, and also those share certificates prevent unauthorized issuance. Okay, so numbering certificates and tracking in a stock ledger helps prevent owners from issuing shares without approval, so that you will be never surprised to hear that somebody, I mean, another shareholder actually issued the shares like without you knowing it. Another law of success when it comes to S corporation has to do with documentation. The documentation of organizational meetings and decisions. So here I'm speaking here about corporate formalities. So your S corporation must hold a document, must actually hold and document regular meetings of directors and shareholders. And if you are able to document organizational meetings and decisions, you're able to preserve actually liability protection. And this process is actually required for certain actions. Okay, so major decisions like issuing stock, electing officers, amending bylaws require documented votes. And also, if you're able to document organizational meetings and decisions, you are able to comply with tax laws. Okay, so you have tax compliance evidence. So minutes substantiate as corporation tax positions and transactions under IRS scrutiny. And you also have institutional knowledge. So thorough records actually ensure decisions and policies are preserved as owners and officers change over time. So that's important from a documentation point of view. So one thing for sure, you want to hold, for instance, an initial organizational meeting after forming your S corporation to ratify things like bylaws. Okay, you can issue shares, you can appoint officers, and you can also set your tax year. Another law of success for S corporation is actually your ability to keep personal and business finances separate. So this segregation of finances is really important from a scalability point of view, but also from a compliance point of view. Scalability because you can't really you can't mix and mingle your personal affairs with your business affairs. Okay, as your business grows, you do not want to attach your business to your personal assets. It will be too dangerous. And also in terms of compliance, because if you're able to separate those two, you are maintaining the corporate veil. You're avoiding tax issues. Okay, so that you can really track and justify business expenses for tax purposes. You can simplify accounting. Okay, because if you use dedicated business accounts, you're able to prevent actually confusion and streamline record keeping. You can establish credit for your S corporation, and you can also manage cash flow. The sixth law of success for S corporation is that you want to really pay attention to employment taxes. So you want to handle employment taxes properly. So when I speak about employment taxes, I'm speaking directly or indirectly about you paying yourself a reasonable salary. So there is a reasonable salary rule. So you need to pay yourself a fair wage for services performed and withhold the payroll taxes. You got to really separate salary versus distributions because only shareholder wages are subject to employment taxes, not dividend distributions. You're also able to avoid hefty penalties. So, failure to properly withhold and remit payroll taxes can result in massive fines and even personal liability, and you do not want to go there. Also, you want to make sure you classify properly, you classify workers properly, right? So, trying to dodge employment taxes by misclassifying employees as contractors risks actually an IRS crackdown, and you do not want the government to really come, knocking on your door. And also, you want to stay current. So, timely calculate, pay, and report all required federal and state employment taxes for your S corporation is going to help you actually stay compliant over time. So that's really fantastic. Another law of success for S corporation is to actually make sure you do not mix business and personal property. Earlier, I was talking to you about personal and business finances. Now I'm talking about the property, your assets. Okay, because the thing is that your personal assets must be totally separate from your business assets if you want to really shield yourself against potential liability, so that you can maintain corporate formalities, you can prove ownership, you can avoid tax issues, you can simplify accounting, but most importantly, you can really preserve your personal assets. And also, you want to make sure you do not run an S corporation in multiple states. It becomes very complicated. An S corporation is already complicated to run in one state. And if you're trying to really running in multiple states, you're just exposing yourself to a lot of problems. So you want to register as a foreign corporation. So to legally operate in states beyond where your S corporation was formed, you must register there as a foreign entity. You want to appoint a registered agent. So every state requires you to designate a registered agent to receive, let's say, official notices and legal service of process. You want to obtain necessary licenses, so apply for any states or local licenses required for your industry in each new state. You want to collect and remit taxes. So the cool thing is that if you are able to register with each state, and if you're able to talk to their tax agencies, and you can collect, report, and pay all applicable sales, income, and employment taxes. And also, you want to maintain corporate compliance. So what you want to do is that in all the states where you're present, okay, you want to hold annual meetings, you want to file reports, and you want to pay fees in your formation state and each state where you are registered. That way, you are able to stay compliant, like let's say across the board. So that's really important. Okay. So the thing is, you can just form a new S Corp in each state, but registering as a foreign entity is usually simpler and maintains continuity for contracts, IP, and taxes. You don't have to start over. Okay. So that's something to think about. And one thing I want to say here is that in terms of collecting sales tax for online sales to states where you are not registered, basically, if you have economic nexus there, then yes, but rules vary by state based on sales volume and number of transactions. Another law of success for S corporation is that you do not want to ignore annual compliance requirements. Okay, so you want to file annual reports. Most states actually require S corporations to file an annual report and pay a fee to maintain good standing. That's important. You also want to hold shareholder meetings. So if your S corporation must hold at least one annual shareholder meeting, actually, and keep minutes of all board meetings. You have to maintain accurate records. So keep your corporate book updated with meeting minutes, resolutions, stock ledger, and other key documents. You want to file tax returns. So that's going to help you actually be compliant also if you file tax returns. And when it comes to a S corporation, you have to file a form called 1120S. But you don't pay taxes on the 1120S. The company at least doesn't pay taxes. You pay taxes on your personal tax return when you file your 1040. You also need to renew licenses and permits. Okay, keep any required business licenses, permits, or professional registrations current. Another law of success is to really pay attention to the Corporate Transparency Act. Okay, and so this is actually a new federal reporting law, and so this actually law requires certain business entities to report ownership information to FinCEN. It applies to most S corporations. So unless exempt, S corporation formed after January 1st, 2024 must report beneficial owners and applicants within 30 days of formation. You want to report key individuals. So beneficial owners are those who own 25% or more of the company or exercise substantial control. Okay, and as an applicant, you must provide filing assistance if needed. There are stiff penalties for non-compliance, so failure to properly report can result in $500 a day fines and up to 2 years in prison, which is really a lot if you think about it. And also, you want to update the info annually. Okay, so your S corporation must file updated beneficial ownership reports within 30 days of any changes, and this is actually at a minimum annually. Okay, so when you think about the law of success of S corporation for S corporation, what are the extras here? Well, the thing is, you want to compare cost and benefits before choosing, because S corporations are often highlighted by tax planners because they offer a reduction in self-employment taxes compared to partnerships, sole proprietorships, and other entities. So just be sure that you think about the cost, because S corporations come with additional tax return and payroll costs that you have to consider. You also want to properly report your health insurance premiums. So paying health insurance premiums, if you're doing this for your family, for instance, you can claim a deduction, but there is a technical difference to be aware of when filing as an S corporation as compared to a sole proprietorship or even a partnership. So when filling out your W-2, you will include the amount paid by your company in box 1 as wages, which allows you to claim the self-employed health insurance deduction on your personal return, but not boxes 3 and 4 or even 5. You also need to maintain and comply with an accountable plan. So an accountable plan is a plan that meets the IRS rules regarding expense reimbursement for employees. So if you are an owner employee of an S corporation, this means you. Okay, this means you as well. And you also want to look carefully at the home office deduction. So if you're working from home, just be sure that you actually clarify everything in your accountable plan. And also, do not miss out on the Augusta loophole. So the Augusta loophole, or 288 deduction, gained popularity when residents in Augusta, Georgia, cleared out their homes every year for the PGA Master tournaments, rented their homes at high rates to fans, and were now required to pay taxes on their rental income. Why? Because our IRC 288 deems income generated by renting a home for less than 14 days to actually be non-taxable. So this actually applies to you because you can rent your home to your S corporation for business events up to 14 days out of the year, claiming a deduction for the rent paid, and the rental income is non-taxable to the owner. And if you qualify, this turns taxable income into a non-taxable income. So that's something to really think about this year. What you want to do also is when it comes to law of success for S corporation is to really remember your spouse. Don't forget your spouse. So if you live in a community property state, your spouse by reason of community property law, okay, may be an owner of your corporation. This can be true whether or not your spouse has stock in his or her own name. So if your spouse is an owner, your spouse has to meet all the same qualification requirements that you do. This can raise two issues. If your spouse does not consent to the S corporation election on Form 2553, okay, your S corporation is not valid. And if your spouse is a non-resident alien, your S corporation is not valid either. So this is something to really think about. Now, there are some states that are community property states like Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, state of Washington, and you also have Wisconsin. So community property law applies to domestic partnerships in three states: California, Nevada, and Washington state. Okay, and so also you want to be you. I want you to be aware of you. We want to be aware of extra taxes for some C corporation. So if you operated your business as a C corporation, you may face some special issues when you convert the company to an S corporation. This can be fairly complicated, more complicated than you want to read about or even watch now. But you have, for instance, the built-in gains tax, loss of tax attributes, the LIFO recapture, but you also have a passive investment income. If you need more information, let me know in the comment section, and I will certainly be happy to explain that to you. You also want to convert an LLC to an S corporation. Okay, you want to know that loans exterminate the S corporation status, especially if you are making a bad loan, quote unquote, bad loan to your S corporation. So, because with the wrong type of loan, you enable the IRS to treat that loan as a second class of stock that disqualifies your S corporation. Okay, of course, small loans are okay. If the loan is actually less than 10 grand, okay. But if it's large, then you might have some problem. Okay. And so the bottom line here is what, when it comes to S corporation, you have a legal status that's constantly changing, but you have to be aware of the changes, and you always have to be compliant. It's just better to maybe outsource the compliance to a third party, maybe your CPA or your registered agent to kind of help you out, especially if you are busy yourself actually running your business on a day-to-day basis. So that will really help you big time. In conclusion to this conversation, I'll share with you the law of success for S corporation. I'll give you the law of success and then finally the extras. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.